I'm Larry Ray, President and CEO of American Manganese, Inc., listed on the TSX Venture, ticker symbol AMY, A-M-Y, with proprietary patents in the U.S., China, and South Africa. Our focus is on recycling lithium-ion batteries for electric vehicles. China recently legislated the responsibility for recycling onto their electric vehicle manufacturers and importers. For more information, please visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Rick Ackerman, editor of the newsletter Rick's Picks. His website is rickackerman.com. He's speaking to us from Colorado. Welcome to the show, Rick.
Thanks for having me on, Jim.
The International Monetary Fund says economic growth around the planet is pretty soft, almost dangerously soft, and they've downgraded Canada's economic growth down to 1.5% this year. Can we believe what they say, or are they really even just giving us a sugar-coated pill?
Well, I think the man in the streets has a pretty good idea of what this recovery has been. It's certainly been a great recovery for Wall Street and financiers, the IPO class. But, where the rubber hits the road, things aren't looking too good. Here in Colorado, we got so over-retailed, and now there's a real problem. We're having creative destruction of the first order, and what that means is some of these large stores are never going to get filled. We've got within a couple miles of where I live, the Best Buy shut down, and a much larger space, a store called the Great Indoors, which is 2 stories. It must be, at least 10 or 15,000 square feet per story, and actually considerably more than that. And we're really seeing the death of brick and mortar retail. And if you take the U.S. economy and the fact that we're supposed to be about 2/3 consumption, that's a big deal when you creatively destroy the brick and mortar retail base.
Is that because so many more people now are shopping online? They don't need to go to the store?
Well, for sure. I'm one of them. And I have mixed feelings about the fact that a lot of states are falling in line collecting taxes on Amazon sales. But there's no question that the tax-free aspect of what Amazon's been selling in many places is a big advantage, and therefore a disadvantage for these brick-and-mortar retailers who are trying to survive. But I look at the best of them, Nordstrom's for one, and I don't think I've been in a Nordstrom's, the local one here, when there were more customers than there were salespeople. So it's happening in a big way. And it's amazing, really, that, for one, the stock market could continue higher with the massive dislocation of capital that's implied by the shift to online sales.
I read a report a few months ago that predicted the death of the shopping mall. Not so much the death of it, but definitely reducing the number of shopping malls maybe by 1/3 or 2/3.
Yeah, it seems to be happening everywhere, and I don't see anything that can even arrest the trend, much less reverse it. You can only convert so many of these big box stores into churches, and it's locally there's a kind of desperation. We had a Sam's Club close, and they're talking about opening it up with I think it would be a Safeway. The only problem is that there's an Albertsons right next to it. So they're talking about cannibalizing one of their best retail outlets here in within a few miles. This giant building has to be recycled as something, even if it's at the expense of its neighbor.
Well, a part of the death of the shopping mall prediction is about those big box stores. You need an anchor client, really. For every shopping mall, you'll notice 2 big stores at either end. And if one of them disappears, those little shops can't really support that shopping mall anymore.
Right, and some of the space has been converted into offices, but you have to see offices ultimately as support units for the retailers themselves. You can't have all these ancillary businesses unless the businesses themselves are healthy.
Someone suggested to me senior housing might be the future for shopping malls because many of them have healthcare facilities. Why not just put a couple of high-rises in where those big boxes are and turn them into seniors housing?
Well, it turns out the seniors like places where there's organic life. This was a point of a seminal book of the 60s called The Death and Life of Great American Cities by Jane Jacobs. And her point was that you can't just put up a few high-rises and a patch of grass between them and some benches and expect life to flourish. You need to create places where there are reasons for people to go from point A to point B. That's what creates pedestrian traffic, and it's what makes a neighborhood livable. But I come from Atlantic City, and I've seen what happens when you leave a senior citizen tower in the middle of the Atlantic City slum. The fact is, nobody wants to live there.
Vancouver, totally different. It has high-rise communities that are livable, walkable. Jobs are there. A lot of people in Vancouver don't own cars. They use car shares. The millennials tell us they don't even want to buy a car. They don't even think about them. When I was young, I wanted a piece of metal that I could call my own. Now they don't have that obsession.
Me too. That's amazing. We used to set up our appointment in high school to get a driver's license. You'd have to set it up 8 months in advance. And, we were all so eager to drive, to get our licenses. And it's so hard for me to believe when I look at kids today, 16, 17, around driving age, and they don't seem to care.
Well, of course, we always looked at a driver's license as a license to freedom.
Well, it certainly was, but I guess there are so many alternatives now, especially with these tiny little roller skate cars that you just pick up and leave wherever you happen to be. And I was in San Francisco not too long ago, and I used Uber and Lyft for the first time, and I was actually pretty impressed by how easy it is and cheap to get from one place to another without a car.
Yes, Vancouver's the car co-op capital of the world, where the companies can't get enough cars. People love the service, and the people who do use these car co-ops say they feel like they're in a private club almost. You drop it off and you meet somebody, and you end up meeting the same people over and over again as you drop it off or pick it up.
Uh-huh.
So they feel kind of special doing it. What does this mean, say, for the crude oil industry? Are we really seeing the death knells of it? I'm hearing that we'll see just one more big surge, and then after that it's going to start to fade away.
Well, the alternatives are so capital intensive. We talk about wind power, but when you see what it takes to not only to build but to maintain, for one, an offshore wind generator or something, it's prohibitively expensive. But we're going to get to see how that plays out in Germany, because they've totally forsaken nuclear power after 2020 or something. But you could also have something very disruptive in the way of some manifestation of fusion energy, maybe not cold fusion, but something that manages to extract power very cheaply from something as simple as water. So, and also we've got Tesla, for one, coming at power storage batteries very aggressively. And if we get a solution there in the way of storing solar power efficiently, it could be very disruptive of the world's fossil fuel industry. And that's probably one reason why the stock market is so obsessed right now with crude oil prices. It's looking for just any evidence that we've got an uptick in demand and prices for energy, because that's really where the banks have made their biggest bets with respect to collateral. They need energy prices to be higher simply because there's so many loans that are linked to fuel prices.
Canada's Prime Minister has made it clear that he wants pipelines to tide water from the oil patches, Of course, on the West Coast, people are very opposed to pipelines. But, of course, again, the federal government has the power to force them through if they want to, although how long do you stay in power? But, again, West Coasters are not where the center of power is. That's Toronto, New York, in the U.S. And as long as you promise them cheaper energy, they'll go for it, won't they?
Yeah, if they can see the light at the end of the tunnel there, the payoff in terms of cheaper energy. Also, the pipe transmission winds up being a relatively safe way to get petroleum from one place to another. But we've got an administration, Obama administration, that is steadfastly opposed to pipeline anything. And even on the supply side, the federal government has just made off-bounds exploration off the southeast coast of the U.S. So I don't think that it represents even so much as the main concern there, as far as I can see, is not so much environmental as let's just do away with fossil fuels altogether and go back into the Stone Ages.
Plus, how do you pack that much energy into such a small package? 1 gallon of gasoline is the equivalent of 23 sticks of dynamite. That's a lot of power.
Right. It's a very efficient fuel, and we're going to have trouble replicating those efficiencies no matter what we do. I mean, the electric car is obviously here to stay, but people don't seem to realize that when they plug in their car to recharge it overnight, that power is coming from, it's not coming from nowhere.
Well, if everybody converted to electricity today, there would be no power tomorrow.
That's about it, yeah.
Yeah, we would have brownouts and blackouts. We'll have more with Rick Ackerman right after the break.
Unbelievable harmony, spectacular performance, the ultimate tribute to the Everly Brothers and Simon and Garfunkel. Bird Dog and the Vintage Electric Band coming to Mission, White Rock, West Vancouver. Buy online and save at ontourtickets.com.
I'm Larry Ray, President and CEO of American Manganese, Inc., listed on the TSX Venture, ticker symbol AMY, A-M-Y, with proprietary patents in the U.S., China, and South Africa. Our focus is on recycling lithium-ion batteries for electric vehicles. China recently legislated the responsibility for recycling onto their electric vehicle manufacturers and importers. For more information, please visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
Welcome back. We're speaking with Rick Ackerman. Rick, what's happening on the U.S. stock markets? What's the big buzz?
Well, I love to come to my trading screen every day and be my usual perma-bear self, but ultimately I listen to my technical indicators. So as bearish as I can be, I'm looking at charts that say higher, and I think the stock market is getting a lift, certainly from higher energy prices, which, as I see it, are in a dead cat bounce. But, we're within a few percentage points right now of all-time highs in the Dow and the S&P 500. And no matter what kind of case you can bring against new record highs, from a technical standpoint, they seem to be almost baked in the cake. So I'm pretty bullish right now on stocks, but when I think of all the reasons I shouldn't be, it's persuasive. For one, stocks are moving higher against a stream of diminishing earnings. Corporate earnings have looked pretty punk, but here we are with the stock market trading, as I mentioned, near record highs. And it's kind of crazy. And most recently, we've had the bank sector, which ironically has been the biggest beneficiary of easing. The bank sector is going down in flames because there's no profits in the interest rate spread as low as interest rates are. So here, the engine of the so-called recovery is sputtering out, but the money just kind of shifts. It rotates into other investment vehicles, and I think that you've got a play in energy here, maybe in part because investors, or let's say the institutional mindset, is that stocks are too pricey, and they're going to come down hard, but maybe if we go into energy, it will come down less hard.
Have people confused a healthy stock market with a healthy economy?
When you say people, I don't think so. I think that the official narrative, what you read on the business pages, on the Wall Street Journal op-ed page, it all conflates a healthy stock market with a healthy economy. But again, I don't think anyone on Main Street is fooled. You can see, as we were talking about earlier, the death of retail, at least brick and mortar retail, and that's a really big deal. And of course, real wages have been stagnant for more than many people have been alive. We haven't seen any growth in wages, and you can also see the middle class being swallowed up by debt. It was somewhat, it was a kind of stealth thing, but over the years, we lost sight of the fact that in the 1960s, a household with a single working person could put a kid through college without going deeply into hock. But now, two professional incomes can't put a couple kids through college without borrowing against home equity or whatever. So we're really getting deeper and deeper in debt, and all of the debts, the $1.6 trillion of student debt, it's not going to go away. In the big picture, you can't get rid of debt. Somebody has to pay it. And we forget that if a student walks away from a student loan, then it's the lender who gets the bill or gets stuck with the problem. So that's where we are. We've got such huge debt, and we think, well, we'll somehow just avoid it. But in the area of pensions and retiree health benefits in particular, we're not going to walk away from it. We've got enormous liabilities there, and ultimately they're going to sap our standard of living.
Bernie Sanders, of course, has suggested that perhaps there should be free tuition to university, at least for the first 2 years. On one hand, of course, that means more government debt. On the other, how fair is it to have students graduate with a $100,000 debt hanging over their heads, and they're going into the lowest paying job market we've seen since the early 1950s?
Well, I think that the students and their parents bear a good part of the blame for what's happened. The $100,000 debt, of course, is a problem. The only reason that we could build something like a $1.6 trillion debt edifice in education is that the government's involved. Government loans are what have made it possible for colleges that don't teach any useful skills to keep raising their tuitions. And the tuitions, the cost of going to college has pretty much outstripped everything else that we pay for, except for medical care. So what feeds that maw is really government loans, and of course we've got so much out there that cannot be repaid that there's kind of a wink-wink that it'll all get defaulted on at some point. But the bigger problem with the colleges is that since they're not under any competitive pressures, they continue to teach skills that have no value in the real world. So that's what makes that $100,000 debt load particularly weighty. Makes it such a burden for graduates. There are no jobs, but they're partly to blame because they majored in art history, and you've got a college system that really caters to that.
Perhaps we need more technical institutes that teach practical things like coding or how to weld.
For sure, and the irony there is that even though the for-profit colleges have come at that problem, they're basically in business to teach things that people need, job skills that will work in the real world. Well, we've got the official level. This doesn't begin with Obama; it predates him. But we've got the U.S. government coming very aggressively after the trade schools. The trade schools were a great answer, but they are getting essentially they're getting schmeiced by the accreditation factor. You know, there's the accredited schools in the U.S. government have really ganged up on Phoenix and some of the other schools that were teaching job skills.
Right. They want the instructors to have degrees, but they learn their skills on the job where there weren't degrees. I've been in the same situation as a college instructor, I know.
Uh-huh.
Yeah, I worked in it for real. It wasn't theory. One theory that we keep hearing is that high government spending can pull countries out of economic problems. Canada plans to run $30 billion deficits for the next 5 years with that theory. Does that really work?
Well, when's the last time you saw government spend even a dime on something that was going to work? You know, to me, every people, especially the Bernie Sanders crowd, doesn't seem to understand that the government can't really give you anything without taking away from somebody else. And of course, as the way it works is we're taking away from the most efficient producers, especially small businesses, and we're turning that money over to the government for as much inefficiency as it can bring to spending it.
Well, the one thing we didn't see in the Canadian budget was more help for small business, lower taxes. They knocked it down by 0.5%, but that's not going to hire more people, and the government forgot small businesses create the most jobs.
And I think, you know, for all we have shot into quote-unquote stimulus, if we had determined at the beginning of the process, you know, emerging from the 2007-2008 crash, that instead of stimulating the banks, we were going to have a true fiscal stimulus by way of a one-year tax moratorium, now that would have created some business. You know, if we were essentially told, okay, everybody, there's going to be no taxes on income for the next year, well, you can imagine how that would have powered the economy. But we've ultimately spent more than it would have cost in revenues. We've spent more on stimulus and stimulus-related borrowing than we would have if we simply let people off the hook for taxes for 1 year.
I like the UK's attitude towards new small businesses. You pay no taxes until you're profitable. So if it takes you 3 or 4 years to get up on your feet and get established, go ahead, do that. We don't want to get in your way.
Well, that's I hadn't heard about that, but that maybe that'll help with their. They've got a real estate bubble there. Maybe that'll help.
Well, they certainly are great at innovative and supporting new innovative businesses, and I think that's one advantage that North America has over, say, Asia, where people learn by rote, but they're not taught to think for themselves. And as long as we can keep creativity bubbling up and support it, I think that's our future.
Well, our future here, our future will always be in the graduates that we turn out from college, and the viability of what I would call the real economy. You know, we've got everybody kind of stoked about the information economy, but that's just we forget that information really should support the manufacture of real things. And it's really only when you get the brick and mortar economy, you have a big capital investment, you've got lots of equipment and lots of employees, that we see real economic growth. But I've always been skeptical that the quote unquote information economy was the ticket to wealth.
A year ago, 3D printing seemed to be the huge darling. I haven't heard much about it. Is it still there? Is it still working quietly and we just don't notice?
Well, I got an alumni magazine from my alma mater, University of Virginia, and it had a really interesting story about 3D printing as it applies to some of body parts that they're engineering. And it's an epiphany, really. The potential of 3D printing is amazing, and it's not true only for the medical field, but for other areas wherever you create things. And it reminds me a little bit of the film Forbidden Planet, where they come upon the self-maintaining equipment of Krell civilization, and the Krell apparently had reached the pinnacle of existence, where they could create. They had a machine that could create anything they might think about. So I think eventually we're going to get to the point where we can make in-house many useful things with this 3D printer technology. But I would say it has spectacular potential, but of course we're certainly not there. Most of what I've seen has been 3D printing of keychain ornaments and things like that. But somewhere down the road, it's going to be huge.
Well, I was thinking your car dealership could print you a car. The metal chassis is made elsewhere, but everything else, the seats, the body shape, design, you could input, and they could print that car for you in 3 or 4 days, and you would have something unique on the road.
Exactly. My son is particularly interested in one model of car. It's Toyota Supra, which was kind of a hot car in the 1990s. And some of the parts are impossible to get, but if you have the original engine, the original specs for these parts, you can create them in a way that would have been much more capital intensive just a few years ago. So from just that one small niche, very specialized auto parts, you could gin up, a carburetor for an Indian motorcycle or something like that, and no one would have to carry inventory. So I don't think the potential of 3D printing can be overestimated.
Rick, anything else you wanted to add on today's show?
I look at the market every day, and it's just kind of nutty, but I'm trying to encourage my own subscribers to understand that the stock market is long ago decoupled from reality, and that we just have to go with the flow.
Rick, thanks a lot for chatting with us.
Thank you, Jim.
My guest has been Rick Ackerman, editor of the newsletter Rick's Picks. His website is rickackerman.com. He spoke to us from Colorado. You're listening to HowStreet.com radio. Find us on Twitter at Talk Digital Net. Our YouTube channel is Talk Digital Network. Questions or comments for the show can be sent to info@HowStreet.com. I'm Jim Goddard. Thanks for listening.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of HowStreet Media Incorporated.